How's it going there, guys? Today I decided to sell my shirt and my pants in order to raise more money in order to pour into some of these SPAC plays. Today I'm going to be going over 5 SPACs that I really like, and 2 actually that I bought today. And I'm not going to leave you hanging. I actually bought BFT and CCIV, as you can see right here on the left side. I bought a couple of shares when the market was incredibly depressed, and as we can see here, I'm up by about 7 and 3% respectively on these companies. Okay, so we're going to go over why I like these companies and other SPACs that I'm really closely looking at. And again, I'm trying to generate as much liquidity because I think these SPACs are highly undervalued, and I think the businesses behind them are very solid. Okay, so first off is BFT. Ticker symbol is literally BFT, and it's merging with Paysafe, which is basically a fintech giant. Okay, so they serve many industries, with the main one focusing on iGaming, but they also serve education, field services, healthcare. Again, there's iGaming, membership and wellness, property management, sports camp registration. And I mean, iGaming is a ballooning field, especially with the pandemic, and I don't think this trend is going away anytime soon. Okay, so if we're looking at Bill Foley is the guy behind BFT, the SPAC behind Paysafe. And if we look at his previous deals here, if we zoom in here on the right side, we have Fidelity here. It went from like a 3 million to a 10.8 billion type business. That's their current market cap. So is FIS, Black Knight. I mean, it's just 1.6 to 14 billion. You're like 10xing your money, okay? So he knows what he's doing, and I really like to have a SPAC and the manager behind the SPAC that knows what he's doing. Okay, and I do think that fintech is the way of the future. It's going to replace a lot of what banks are doing and what banks are providing. And I really like the company Paysafe. A lot of people are saying that it could be, for example, the next PayPal. I mean, I don't know if I believe it that much, but I do think Paysafe is a very underrated stock. And again, I mean, I bought some shares today. So what I like is, of course, it's winning in US iGaming. It's like the number one player in that. But what I like is it's a very high margin operation because it operates online. It's very high upfront costs, but then the previous, like the additional costs, are less and less, okay, because it takes advantage of economies of scale. So a lot more of that revenue goes straight to the bottom line. Okay, so as we can see here, they did 103 billion in total volume for 2021, or sorry, that's the expected. 1.5 billion in organic revenue, which is double-digit growth here, and 17% organic adjusted EBITDA. Okay, compounded annual growth rate. So that's very impressive. Okay, again, it's number 2 in the digital wallet field, number 1 in the iGaming network, and number 4 in the independent merchant acquirer in the US. Okay, so I really like the opportunity that Paysafe has here. And we're going to go again over some numbers and what I really like about this company, okay? So again, it just shows some figures about the iGaming, and again, it's a global leader in iGaming, which is not an opportunity that's going away anytime soon, okay? Now you can even go on a game and compete against someone else for real money, all right? And again, Paysafe is most likely the platform where you actually do those transactions if you're on a gaming service, okay? Again, look at these opportunities here. It's just very cool, okay? So you have bank as a service, operations and enterprise sales, and gateway convenience and service, okay? And for example, they expect the iGaming field to go from a 3.4 billion field to a 47 billion market cap by 2025, which is a 52% compounded annual growth rate. Okay, so that's really cool. Okay, and take a look at their high growth verticals. So you have property management, video gaming, subscriptions, education, online remittance, and all that stuff. Okay, so it's really awesome, and I really do like what they're doing here. Okay, and what I also like is that they have income coming in already. So for example, in 2018, they did $87 billion worth of income, and they had 1.2 billion in earnings, 1.3 in 2019, and 2020 they're expected to do 1.3 billion in earnings again, 1.5, and just going around 11% compounded annual growth rate. Okay, so I mean, not the fastest growing field, but again, they're already an established company with 1.3 billion in revenue. Okay, which is really what I like to see. And you can see most of their revenue comes from processing, some comes from digital wallets, and some comes from eCash. Okay, so pretty cool, and it's to be expected. Processing is where they're making most of their money. Okay, so that's why I like BFT. Let's move on to CCIV. This is actually a stock. Like, look at the move. This is the way that the market works here, okay? It was like $25, then it dropped down by 12% in one day, and then it actually went back up again by 14, close to 15%, and then from there, it actually dropped by about 14%, and I actually bought it here, and now it's up by, like around 11% since then. So look at the moves. The markets are just crazy right now. Okay, so I mean, I think you have to take advantage of all these dips here. Okay, and I mean, this is a stock you don't want to miss out on. For one, there are talks that there's going to be a Lucid Apple partnership. Because of this random tweet that CCIV Apple autonomous car. Here are the big clues. Lucid Motors CEO dropped. He was about to say Apple, but stopped his chatty lips, but he did grin. Okay, so let's see what this guy has to say.
A compelling argument for partnerships.
And he actually says it near the end here.
A big company to prove out its AD software, I think.
Now, was this all developed in-house, or did you partner with supplier?
So basically, there was that tweet that he was saying, Lucid has the perfect vehicle. It's a luxury high-end vehicle. It has all the hardware and software to back it up. Batteries are made in-house. It has all the best specs. So it's the perfect opportunity to partner with Apple in order to create this sort of supercar, okay? And it would be a lot more efficient for Apple to partner with them because that would mean that they wouldn't, like, Lucid wouldn't, or Apple wouldn't have to make their own car, okay? And it's already called the Lucid Air, okay? Just like, MacBook Air or whatever. So, I mean, there are a lot of hints coming out here. I don't know if I necessarily believe them, but I do think it's an interesting proposition. And I do like what Lucid is doing long term, okay? Again, it's in the luxury EV position, which is the postmodern luxury type deal. Okay, so what you have is Lucid, which is post luxury, instead of like sport luxury like BMW, or classic luxury like Mercedes, or tech luxury like Audi. Okay, and Tesla, for example, is innovative but not luxurious. Okay, and if you're looking at the actual stats of what the Lucid Air does, and I mean, it definitely comes with a pretty expensive price tag at starting from 70 grand. Its projected range is 517 miles, which is more than Tesla does, okay, and 1,080 horsepower. All right, but you do definitely have to pay for this luxury hardware and software system, and just like a really nice experience in the Lucid Air. Okay, so again, look at this here. The Dream Edition here has 503 miles. The Grand Touring Edition has 517 miles. Compare that to the Tesla Model S long range, it's 412 miles. So that's very, very impressive to me. Okay, and the tech, again, behind this is really, really good. And again, it has like one of the most integrated entertainment systems in the Lucid Air, and you can expect once they start selling these vehicles, their autonomous driving capacity to pick up. Of course, it's not going to nowhere near match Tesla's, but again, down the road, that's where I'm looking at and what I'm really liking for the Lucid Air. Okay, and this is a stock that I've been in and out of. So I got it back when it was around $18 a share, and then it spiked up to over 200%. I decided to sell, and thankfully I did sell because then it dropped by about 58%. And so I decided to get back in and see where it goes from here, okay? And it's also funny where these conversations board, it's just, when the markets are exuberant, these guys are exuberant. They're like, oh, like, F the shorts and all that. But, and as soon as the stock goes red and people start losing money, they get all mad at the stock. So, for example, this guy's like, it's been an honor losing my money today with you, gentlemen. And I feel really bad for this guy. Awesome. If the stock goes up another 78%, I will be fine. Breaking even. I wanted to love Lucid and be a major proud stock owner, but the suits ruined it for me. No Lucid shirts, hats, or anything for this stockholder. I'm too upset on the deal, which left us holding the bag. And again, like with anything, this is a very important lesson to learn. It's at the end of the day, it's going to be the retail investors that are going to get screwed and sewered when a stock like this is way too overhyped. So many people buy in, and then it just drops absolutely like a rock. And who knows, it might even still drop. I think it's nearing the end, but again, we'll see. Okay, so I mean, a lot of people have lost a lot of money on this, and when you're playing with SPACs, and especially electric vehicles now, you have to be very, very careful. Okay, and the last stock that I really like, and I actually own some shares, but I'm down by I think probably about like 20 or 30%, is Apex Technology Acquisition Corp, which is merging with AvePoint, which is a security software provider for Microsoft 365 and specifically the cloud. Okay, so this already has, it's a really cool company, and it already has revenues to back it up. And again, it's another one of these very um, high growth companies that has a very high margin. Okay, so what is it? It's a leading data management solutions provider for the cloud, of course, specifically Microsoft. Total addressable market to be 33 billion by 2022. They have over 1,300 employees in 29 global offices. And again, I really like a SPAC that already has good management behind it and that already has successful revenue. Okay, so they're predicted to have $148 million in revenue for 2020, which is 30% growth. And again, they have more fresh capital to invest in. Okay, so here you can go through their presentation, but I just want to go down and look exactly at the financials. Okay, so here you see the annual revenue growth from Q1 to Q2 2019 was 19%, to Q3 was 23%, and finally the projections for 2020 Q2 was 29%, which is really neat. Okay, so compounded annual growth rate was 38% for recurring revenue and 30% for just revenue in total, okay, from 2019 to 2022 expected. Okay, so I really like to see, again, that double-digit growth. And if we're looking at the gross profit margins here, in year-to-date 2019, it was already 70%. So a lot of that revenue, so let's say they get $1 in revenue, 70 cents is going straight to the bottom line, straight to income, which is really cool. And they actually expect it to go to 74% by 2022. So I really like this stock, and that's why I'm a proud holder of AvePoint, okay, which is APXT is the ticker. The next one I'm really looking at, it dropped by 13%. This is another charging stock, basically a penny stock at 95 million market cap. I bought in and then it surged by 86% in one day here. And I decided to sell out. And I mean, whenever you have a move like this, you know that it's not going to last long, okay? And since then, it's down by about 42%. And I think it might be a pretty good opportunity to get in on this stock. It's merging with Nuve. And what it's trying to do is basically become an integrated charging station solution. So when the cost of electricity is low, that's when it charges the vehicles. And at peak demand, that's when it actually sells electricity back to the grid. Okay, so it's a way of stabilizing the electricity costs for charging your electric vehicle stations, again, as well as providing a charging station for electric vehicles and especially for utility fleets like school buses, like like mail driving vehicles, for delivering mail, etc. And then the last one that I'm really looking at is StarPeak. Again, this one has a lot of hype, shooting up by close to 400% and then falling down back to earth by about 47%, now sitting at $26. This one is StarPeak Energy Transition Corp, which is merging with STEM. And STEM is a really cool problem. So their vision is smart battery storage, and it actually has a higher battery storage capacity than does Tesla, okay? So again, climate change is the major problem, and this is what we're getting into, and there's a lot of stimulus coming in by Joe Biden, etc. And it's basically a revolutionized grid, again, with STEM, okay? So they have energy storage, battery optimization, and they're also working in AI. So they actually have this thing called Athena, which is the AI software behind the battery optimization. Okay, so again, they have hardware and network integration with the AI to basically provide a really cool battery tech for major companies. Okay, so AI, battery tech, you put those two together, and that's a pretty cool thing. And this is the comparison right here. So storage capacity for STEM is higher than in megawatts, higher than Tesla, Hyundai, all these other major battery tech companies. Okay, so that's why I'm also really looking at StarPeak. All right, so these are like my 5 or 6 SPACs that I'm looking at. Let me know what you think about all of them. Again, I just sold my shirt. I just had to put in more money into the market because this is a very significant opportunity, and you don't see drops like these often. Okay, and if it goes even lower, I don't know, maybe I'll have to sell my soul to put in more money. Anyways, take care. I love you all. Be sure to give this video a thumbs up, and if you watched this far, subscribe if you haven't already. And if you're Canadian and you want to get started into investing, check out my link to Wealthsimple below. That's basically a zero commission Canadian trading platform, and you get $10 off of your next trade. All right, take care. Boom. Peace.